Nothing is more exciting for me than thinking about how to tokenize everything that is not tokenized in the financial markets right now. I think that creating different mechanisms and leveraging different opportunities in decentralized finance is just going to be such a massive element over the next years to come. And we are at the forefront of this. And I think that everybody that's up here and everybody that's at these conferences are in such a unique position to take advantage of that in whatever way it is that you're involved in this business. But one thing that is exciting is taking the infrastructure that we have for regular stuff that people are doing today and figuring out how this industry can impact it. So we put together a panel that's engaging in everything around, finance and reshaping the capital markets. And I'll let everybody up here give a little introduction of yourselves, and then we'll start the conversation.
Hey, I'm Michael, 45 from Tel Aviv. Been in the Web3 business since 2017. Created a crypto competitor, which is something sold to Fireblocks. Later worked with Morgo, Urano, and blockchain traceability and transparency project for RWAs. And now doing stocks, bonds, and ETFs for the DeFi permissionless market as non-securities. I repeat, non-securities. Anybody that has questions about it can talk to me later. I'll let the other panelists speak, and I have a lot to say about AI.
Hey guys, firstly, thank you so much for having me here. My name is Remy Ashkar, I'm the Chief Marketing Officer at CryptoIndex, cryptoindex.com. We're making, take the S&P 500, but for crypto, we're basically doing that, making it more accessible for retail investors to not have to go on Twitter at 1 a.m., look at their favorite KOLs, see what tokens to buy, but rather do it as one collective. So yeah, that's what we're doing and what we're building.
Hello, everyone. My name is Sergey Gribnyak. I am a PhD in computer science with close to 18 years of experience in the development of various applications. So I was a technical co-founder of the fintech company, which was acquired by Capital One. It happened in 2020. It was Web 2, but not Web 3. Since then, I wrote PhD and on the topic of the directed acyclic graphs, and I received an award for this. And also this, basically the result of this PhD was a project which is called waterfall.network, and according to ChainSpect, it was the first EVM network to outperform Solana and Aptos by factual scalability on the mainnet, which some people were saying that is impossible, but we basically proven them wrong. So also I did some work for Ministry of Digital Transformation of Ukraine. So I contributed to the innovation strategy of the country, which was presented in December of 2023. And also, yeah, I do some work for IEEE SA, IEEE Ukraine section, and I contribute to multiple open source projects under IEEE and Linux Foundation. Thank you so much for having me.
Thank you. So the first question I want to ask you guys is, this is a year that you're seeing RWAs go from, nobody wants to touch an RWA to everybody wants to talk about tokenizing RWAs in some way. And we think there's a big opportunity now. What do you guys see happening this year? How do you envision or see AI playing into that? And what changes in the capital markets?
I'll be the first. First of all, we are breaking the wall between TradFi and we're actually bringing S&P 500, Tesla, likes to Uniswap, Aerodrome, Helix, GMX, etc. And we're not an AI company, But we are looking forward to using so much AI, and it can start from just picking the stock and replacing it by itself and balancing your portfolio, rebalancing it agentically, automatically, with a few directives, but just running on it and making more money for you. Talked about A/B testing and agentic improvement. So all of these things, I mean, I've been asked, why doesn't it do dishes for us? Why must it take my job and not, take off stuff from me? And that's very interesting. I'm also involved in advisory for a company who's building AI agentic autonomous bots. So they're actually going to be the last company on Earth. After that, there's nothing that we need to do. That's interesting.
Okay, so I just want to make sure you guys heard what he said up front, is that they're taking stocks, ETFs, stuff that trades on regular stock exchange, and they're creating an environment that you can trade that in a decentralized way without it being a security. That's amazing, right? And if you can figure out how to do that with the S&P, then that opens up a world of other things for people to do. And I think that's the beginning of a tipping point. So,
Yeah, I guess in terms of trends, the last 12 months have been very interesting, especially for a marketer with deep in narrative, RWA, AI as a wider one. There's DAI, some crazy things going on. With us, in terms of with cryptoindex.com, as I said earlier, anybody can come on, build their own index. If you're somebody such as Vitalik, CZ, who's got a lot of insider information, you can build that, get your community to follow. You're taking a cut of the profits. The community is obviously profiting as well from all the insight and all the alpha that you have. In terms of the direction we're going, I think right now DeFi is really the playground for both TradFi and AI and the crossover there. It's very hard to tell. I think the progress made isn't really counted in years at this point. It's more months. So in terms of my predictions, it's very hard to tell where we're going to go.
I think that this question could be addressed differently, but what I do believe that with current pro-crypto switch of the administration of the United States, we are going to the area where we will have more professional, compliant, institutional, and more professional and also compliant DeFi. So I am. There are many. There are a lot of components here, but in general, if we will go to one level higher, right, we usually are getting to the problem where we have, some centralized providers of such services, right? And we have decentralized. And centralized are more convenient. They have support and all these things. And decentralized are only cool because they are decentralized. So, and to majority of the population, decentralization isn't that important. But we understand that this is important. So our task here is to make decentralized services at least as convenient and as efficient as centralized, and maybe somewhere even more efficient, more transparent, more secure in some ways. So we generally, one of the projects in our ecosystem, in the ecosystem of Waterfall, is working on the, I think, maybe first AI-enabled decentralized exchange, which has two use cases. One use case is analysis of the community sentiment, which is currently only being tested on the centralized exchanges. So this is why we're saying first, because it is first DEX with such functionality, which can allow institutions and retail investors to make more educated choices. And second thing, a pain point of the DEXs is actually impermanent loss. And when we are talking about optimizing the strategies of deployment the capital to the DEXs, right, we can apply some algorithms similar to stat arbitrage. So for those of you who don't know what is stat arbitrage, it is basically a trading strategy which finds two correlated assets which are following each other's trajectory. So, for example, back in the days, it was the correlation between Bitcoin and Ethereum, right? So Bitcoin goes up next day or in a couple of days, Ethereum goes up. It's not like that anymore. But using similar algorithm, there could be found opportunities for deployment efficient liquidity pools and with proper proportion, properly correlated assets, and yeah, that's very exciting.
So
Yeah.
you mentioned though that you think that there's going to be more regulation that's going to come into DeFi. That's what you're saying.
Well, I'm certain there will be. I actually am. I'm not a believer with DeFi without KYC and AML. And what we observe in the current world will be pushing forward with the. It will be happening faster.
I'm not sure I agree because I don't think that KYC AML works. I mean, who are the experts of KYC AML? Criminals? Do they find a way to go around the system? And I'm not saying that there should be no checks, and I'm not saying that everybody can buy anything without any regulation or stop. But I think KYC and AML has proved failure in many aspects. And it should be canceled, it should be replaced. And I think that we are one of the first companies that are bringing things that were not allowed yesterday to a new world with more regulation clarity. So we are actually bringing something that was a security to the crypto regulation, or under the crypto regulation. And it is not AML KYC on the second layer. And we think that this democratizes and opens up so much options to people that do not have access to these tools. So they have no way of buying Tesla. They have no way of buying S&P 500. And think about how many people in the world would be able to save money, gain money, create capital, and create a future for themselves, which currently is very limited because of this inaccessibility. So we really, really think that regulatory clarity is very, very good. And we see, let's say, it's surprising, but the EU has created the laws that allow us to act. And I know people in this room that have a lot to say about Mika, however you want to call it. But note that the EU has actually created a new asset class that allows to bring these assets as cryptocurrencies. And a lot of regulators are going to follow through. I know that UAE, Hong Kong, Singapore, all these very advanced regulators are looking forward to open up more decentralized markets. And sorry, I didn't talk too much about AI, but I really think that the DeFi markets help open up a lot of opportunities for people today that don't have.
So let's talk about AI a little bit in the context of this. Rennie, in your product, it requires somebody to create the index and other people to follow that index. When does AI take over that and everybody's following different AI indexes?
Yeah, that's a great question. I think you've seen products such as I think Cookie Free did it quite well with their platform with the AI agent tracking. I think at some point on cryptoindex.com you'll be able to go and follow your favorite AI agents that are trading 24/7 on chain through using smart contracts. So it's fully non-custodial, all on chain, very transparent, and hopefully for the retail users very profitable. But yeah, that's what we're working towards at this point.
Is it private or transparent completely, because a lot of companies don't want their trading strategies to be out there, and they have that right, I think.
Yeah, of course, but with AI agents, it's their own trading strategies.
But still, I think that the privacy layer, I'm not talking about anonymity, but the privacy layer that would not allow everybody to know what my firm is trading, how my portfolio is built, what my tactics and strategies are.
But the concept of your index is that it does that. If you're invested in the index, it's letting everybody know what they're doing.
Yeah,
Right?
yeah, of course. Yeah, that's the basis of it. Yeah.
So do you think that we're within this year that AI is beating out the indexes being created by the CZs that have the inside information?
I mean, you take even wealth management companies. They have quants and analysts working, doing all the research. Whether they're replaceable or not, this is a hot take potentially, but whether they're replaceable or not by AI and AI agents at this point in time, it's only a matter of time. Time will tell. And going back to your question, will it outperform CZ and the likes of CZ? In the near future, I highly doubt it, to be honest, because the information they have, nobody else has. I don't think that data is available for machine learning to get access to. So maybe in the near future, you never know.
I tend to agree that currently that inside information of the CEX is private, but I've been looking at the answers that the machines have been giving me for the last few months. They have reached the level where they outperform us right now, and it's very scary. I think that the time is shortening to this era.
Yeah, for sure. The thing is, the time's definitely in their favor as well. They're only getting smarter, getting older.
Yeah, they have the advantage there. What do you think? What do you think happens with AI integrated into all of this?
Well, I think that we will have significantly increased usability levels, because one of the problems of crypto adoption is that it was not convenient to use compared to centralized solutions. I also believe in the number of features such as those which I already mentioned, and yeah, actually, AI allows first to enable stronger security due to analysis. And by the way, addressing the kind of this small debate about KYC, not KYC, how it works, etc. But AI is helpful to prevent, let's say, different malicious transactions. And this compliance procedure may be modified, but it, I believe, still will be present. Also, and then numerous distributed computation aspects, because again, there was this how to say this DeepSeek moment, right? When the company with like 2% of the spending compared to say OpenAI, which is spending like $7 billion a year, right? It is interesting, and I can say I put money into one AI company which is competing with big tech. And then later on, I was thinking, okay, why did they do this? They have like what, let's say 100, 200 million, but what is it compared to the money which big tech has? Google, Alibaba, OpenAI, etc., Elon Musk. But then after this DeepSeek moment, my faith in the fact that the David can defeat Goliath in this, it returns. So I actually keep my allocation in this company and and add it a little more. So yeah, that's what I think. Thank you.
So just to cover a couple of things that they just talked about is if anybody's ever been through that KYC process on any of these platforms, it's a pain in the ass. You got to upload your, passport. You got to prove that you're worth a certain amount of money. And then, a lot of people that I know are accredited end up getting denied in that process, right? So It's it's just there needs to be a better way. Like I think there's a medium between what you're saying and what you're saying. There has to be, there has to be some regulation, but it has to be, if somebody's willing to invest $200,000 into something, they're an adult. They should be able to do that. They shouldn't have to upload their bank statements to prove that they can do that. Like, it's not like you're, trying to get $5,000 from a grandma. If somebody's putting up 200 grand into something, that should just be enough to say that this person is accredited. And even 100 grand or 50 grand, right? Like, it should, in my opinion, I don't think that should be there. I mean, people, we should let people make their own mind up about where they want to put their money. We shouldn't be telling people that they should or shouldn't be able to do things with their own money, whether you're putting $500 or $1 million. It's so I think that creating this DeFi infrastructure where there's a lot of people that in this room understand how this all works, but there's way more people that are out there that have no idea how all of this works. And so what do you guys see as being a tipping point for people to make that transition into this decentralized environment where they start to embrace this instead of just going to E-Trade to buy Apple?
Okay. First of all, I don't think that we should get rid of everything and just let everybody buy anything. These security laws were instated to protect customers, not to harm them, quote unquote, and now they harm them. But if you go and regulate the companies and limit them in their action and make them follow proper procedures, you're protecting an investor as well. So that's one way. There are many ways to protect people, protect companies. But what we see is, and you're talking about adoption of DeFi. And I think that we see a lot of efforts and a lot of companies trying to break through between Web 2 and Web 3. I think the most successful iterations and companies that do that are companies that find necessities and purposes and reasons why. It's all about reason why. I like narratives, but narrative is just a nice word to say. If I have to go through an area that I get robbed in every time I go through it, there are a lot of people that use crypto just for that. I'm not joking. There are people who have to cross dangerous zones from and to their workplace, to their home, and they absolutely get robbed every time they come in and out. So crypto saved them. Crypto allows them to earn money and not get robbed. So that is a purpose. That is a literal purpose that they have to use it. So the more purposes and reasons why people have to use it, they will. It's not just about adoption. And obviously the usability part is one of the most difficult parts. So crypto is terrible in UI. It's just awful. I mean, try adding supposedly a testnet to your nodes. And I've seen, just for example, there's MoonPay. You guys know MoonPay? MoonPay allows my mom, we talked about grandmas before, my mom could buy Bitcoin on MoonPay without knowing that she's on Solana and she's buying crypto. It's not the point. Who cares?
I think Michael has a good point with usability and UI being, frankly, pretty shit at this point for 90% of applications and use cases. The other thing for mass adoption is institutions. Institutions need to be fully aligned, have clear regulations, have not changing their opinion and regulations on a monthly basis, but have a clear roadmap of what's going to be done, how's this going to enable people outside. Obviously, here everybody knows how to use Trust Wallet, how to go on basically do stuff related to DeFi. Go outside. It's you mentioned DeFi, most people won't even know what it is. So until institutions and big players of countries and regulatory entities start giving clarity and actual genuine use cases, we will not have mass adoption. That's my honest take.
So you think it's driven by the big institutions is what it's gonna take?
Absolutely, because we can't force it. Me, Michael, can go up to people and say, you have to use this DeFi application. And, yeah.
Interesting.
Yeah, I actually agree. So I was always a believer that mass adoption will be coming from government and enterprises. And for this to happen, there should be regulations and standards. Again, I'm not a lawyer, so I'm working on the standards, and that's, by the way, why I'm part of my activities at IEEE Standard Association. But in general, for example, the case you started, right? So somebody would like to invest, I don't know, $200,000, and why this person should be asked all these, sometimes. Excessive questions, right? But for example, using RegCF, right, this type of investment, I think they are possible. I don't remember exact numbers right now, up to 250K, up to 5 million fundraise, and there is some there is some limit of the evaluation of the company. But the biggest issue with this, it still involves all this KYC procedure, etc. And by the way, it could be decentralized with single unique digital ID when you have passed some. When you have passed this process, and then you have your ZK signature, which allows you to sign it and validate that you are eligible to do this, and that. And this can be done in decentralized environment. So basically, you signed it, and then you are getting access to the markets which you are eligible at. But the biggest issue, again, still regulations, because all of this, let's say, happens, right? But what then happens with this company, right? So in let's say 2 or 3 years, some lawsuit is happening, and company is receiving cease and desist order and whatever it is, and and basically all these people are can be victims because they may lose all their money. So definitely governments probably go first with their regulations, and then standards of solving these tasks will be we are working for them to we all are working for them to be ready at that moment for utilization. Yeah.
But where do you stop it? And how do you avoid it from just becoming what it already is? It's like, how do you not let it just become another version of what already exists? And that's where the real opportunity is in making it something so new that's completely different, and just not another mechanism by which to trade the same thing under the same format. That's what excites me about it,
Yeah, that's actually an the current issue with RWA. I cannot say that I'm a big professional in this because again, I'm more on the infrastructure level. But what I keep hearing from some of my friends who are working in RWA, in the current environment, there is no big upside of using it. So there should be some transition from 0 to 1, and some clear explanation. Okay, if we implement this use case, this can rise, I don't know, the macroeconomic parameters will rise, I don't know, we will have, and by the way, we have such a case. Actually, the standard we work on is a standard for recurrent transactions. And if in the United States we pay a couple of percent for every transaction, for the phone, for gym, for utilities, etc., and there is usually an overnight or sometimes 2 nights delay for receiver to receive money, we actually came up with a solution based on lazy computation, which allows money to be available for the receiver like next minute after due date arrives. And why is this important? So, and it costs penny no matter the amount. So why is this important? First, for the companies who are, let's say, I don't know, T-Mobile, who is collecting a lot of payments on the credit cards. If applied with some stable coin, it can Basically, it can sell them millions, tens of millions, or hundreds of millions of dollars on fees. If we are applying this on the scale of the country, then we can actually increase macroeconomics parameters of this company of this country, because there is no this overnight delay. So basically, liquidity of the funds are getting faster, and this is one of the standards we're working on. And basically, yeah, I was also a co-author of this solution. I can talk a lot about it, but please, I think, yeah.
Well, let me, I think we're getting to the end of this. Let me just ask you guys to finish up with kind of what your prediction is for what happens through the rest of 25, and where do we end this year at, and where do you think it's going?
All right. Just one thing about RWAs. RWAs have been around since 2014. Tether, USDT is an RWA. That was the first one. So we're talking about things that have been around for a long time and are improving. What I think that will happen until the end of this year, I really hope Trump will move a bit to the left and open up DeFi markets more. And I know a lot of companies in the US that are working towards that, finding different ways and above their head and loops. And this should be solved. And really think that until the end of the year, DeFi stocks, bonds, and ETFs will be available. That is my
And of course.
Yeah, I agree with, for the most part, what Michael just said. I think the big factor really is it's not viewing the use cases or the tech that's being built, it's the regulations that are going to be put in place, specifically in the big markets such as the US. So depending on how President Trump is feeling in a few months' time about DeFi and just in general, that'll be really the big shift. Until then, it's impossible to say. I mean, DeFi is really like I said, the playground for TradFi, AI, RWAs, crossover of all three. So it's really, it's a testing ground. I think once regulations come in, there will be a correction. Some of the use cases which are just too small to be sustainable are going to die down, and then the rest will continue building, onboarding more retail users, onboarding general public, and that's ideal scenario.
Well, I hope that we will be able to achieve these transitions from 0 to 1, from centralized finance in decentralized finance, present them to regulators. Regulators will say, yeah, that's a great idea, and apply these regulations, and we will transition to the good world, to the better world. Yeah.
All by the end of this year. Perfect. So lots of amazing companies up here. If you get a chance to take a look at them, if you haven't been on the DNA deal desk, we have a platform that's called dnadealdesk.com. You can go on there. You can see the deals that we've picked out that we like, and you can invest into those deals alongside of us. You can lots of very cool companies on there that we've gone through and hand selected. And so you can invest in DNA there. You can invest in our funds there. You can invest in our portfolio companies there. So you can do that all through DNA, and you can experience the KYC process. If you were just wondering how amazing it is, you could go through, but by Token 2049, if you are living outside the United States, you don't need to go through the accreditation process anymore. So we'll have that ready where everybody outside the United States will not need to prove that they're an accredited investor. So that'll be open up a lot of opportunity for people with VPNs. So so I appreciate you guys coming here today and talking to us about this. I look forward to watching your companies and seeing how you guys do, and picking out some of the indexes, and definitely want to try to trade the S&P on a decentralized exchange. That'd be exciting. So, and best of luck with everything you're building. So thank you very much.
Thank you.
Thank you very much. Thanks to DNA for inviting us.